Good morning, everyone. How's everybody doing this morning? Hey, Marcus, John. Hey, Doc. How you doing? Hola, Juan. Oh boy, what do we got this morning? Looks like we're in range in cost basis, but we seem to be testing these lows, huh? So once again, overnight inventory is short. Right, real simple. I did a video on this. So the bulk of the trading is underneath the previous day close. So inventory is short. Later, if we hold the previous day low, they say the odds are for a move higher. But let's see how well the market holds up this morning. Personally, I'm looking to see if we can hold this 7406, 7496 balance. I'll give you a bit of a better chart. You can see this is exactly what we're dealing with. So 7406 is the area that I'm interested in. We'll see if it holds. As London starts to open in a few minutes, I want to see whether or not we can hold yesterday's low. And yesterday, I'm pretty sure we didn't fill the gap. So we still have that gap. It's unfilled. And there's supply above us, right? There is supply above us. Okay. Balance zones, I've got 26 half to 32 3/4. Let's see how well they work. Hey, Juan. Hola. Raj, what's up? Shanghai, how you doing? Okay, and the levels on this half-hour chart have been working pretty nicely. The look below and fail of 74.33 was pretty nice. A couple of times. If you look at our half-hour, you can see that we've got a seller under 33 now. And as this candle is going to close in 10 minutes, we're going to see whether or not, if you're a short seller, there's your warning level is here. Okay. Which is nice. It's nice to have these things. So 74.30 is your warning level, right? If we start cranking over 74.30, then you know that inventory is going to start correcting higher. It's a really simple way to look at markets. I like simple because execution, as we can see over the last couple of weeks, these markets are not simple. They're not easy to trade. So I would say spend most of your time practicing your execution and keep your analysis simple. Where are the buyers? Where are the sellers? Where do they initiate? And where do they stop selling? Hey, Moran, how are you? So say you were thinking, okay, if you're building a short position, I would be using 26 half as my warning, and I'd be using the 28s, 29s as my out. Okay? We've already kind of done a little correction of inventory up, and we know now that there's a seller right there at 30. See? It's confirmed on a half hour and 1 minute. So, for example, if you're shorting this area, you're shorting the 25s, right? If you're short, say 25 and a half, 25 and a quarter, I would put a lookout offer at 26 and a half, right? Because if the market starts offering over 26 and a half, you know you've lost your seller, right? And this is how you can micromanage that trade. So you're short in the 25s, this area here, that's going to be, if you're a smaller trader, that's your out. Now, where are you going to go put your bids? You see that there's a 25 bid? So go and put a bid down here at 24 and see if you can buy one contract back, right? If you can't buy a contract at 24, especially as we get into the London Open, the market's basically telling you that they don't need to sell under that level, right? If the market's really choppy, see how the offer's lifting? Now watch it at that level. Hey, Jerry, what's going on? You're back. Mr. Holiday's back. Good to see you. See? So it took my 26 half offer, my buy stop, right? And if it stays over 26 half, you'll cover the rest of the position. Okay? I can't believe you. I don't know where you get a 5-week vacation. That's amazing. Good for you, right? So I scratched, right? And this is a way you can trade without getting into a whole mess of trouble, right? If you lose your seller, why are you going to be short? It's really, really very simple, right? You need sellers to compete and lower price in order for your short to work, right? Yeah, teachers, you're right. So if we looking for a look below and fail now, you know that there's a seller at 20, 28 and a half, and you know that seller is right there at 29. So it might be kind of crappy order flow right now. So let's see what happens. You can always tell from taking a trade. Say you went long, right? Say you flipped and went long 26, sorry, 27, 27 quarter, right? Make sure you have your sell orders out if you are long, because just in case the thing rips, you'll be in line, you get taken, and you make your money back, right? Looks pretty choppy here. Let's see what happens when London opens. Oof. There's a lot of inventory down here from yesterday. Yeah. When inventory's short and most of the trading is underneath the previous day close, what we'd like to see is this position taken and sold here. See if I can get out of that one contract at 29 3/4. If I can't get taken at 29 3/4, I'll just sell it at half. I'm out at a half. If we can stay above 30, you're looking for VWAP, right? There will be sellers here. They sold here, sold here, sold here. They will sell again. Oof. So that stop out that I had just under 20 in the 25s, right? That scratch trade told me that I was trading in the wrong direction. Right? Pretty simple, right? We want to keep this as simple as possible. Keeps us trading in the right direction. Keeps us from losing a lot of money. Because most traders, what they do is once they get into a bad trade, they keep adding to it, right? The business reason for the trade for the short was gone, right? We outlined it before the trade happened. So we knew exactly, okay, we're going to be getting out here, right? It's not going to work, so we're getting out here. Hey, John, how you doing? And there's no reason to be short at 25 when it's trading at 30. There is no business reason at all. So every trade has a business reason. And if you want to check out our trading room, we are for one day having a free trial. So we're running a free trial access test drive for one day. Come in the room and check it out if you wish. If you want to learn how to trade with a little bit of common sense. Now let's see what happens when London opens. That seller at 31/4, let's see if they lift. And what I mean by lift is, do they lift their offer? Right? See how they're selling here? See, there's the lift. There's the print that they're lifting. Right? Just as I said, inventory is correcting higher a little bit. So we're going to look and see where they sell into it. The top of that candle, does it hold? Right? If you map out where the sellers are going to be when you're long, it's so much easier for you to navigate the market. Boy, not much order flow this morning. On London, it opened and went straight up. So I don't see a big short. I think if we get above VWAP and if we clear 35, I think you guys will be okay up until the 38 and a halfs from here to here. There's VWAP. Now we expect a seller at VWAP, right? If there are enough people who are short, like I was, underneath 26, who added to it in the 30s, when they go to cover, we'll pop the top and pop over VWAP. Okay? Markets are rotational. Right? So we do have a seller at VWAP. That is definitely normal business. See how we can't tag it? There's a little space. Right? So let's see. We're going to backfill the move now. And let's see if we can hold that 30 area as we come back in. Right? And if we can hold 30, it'll stabilize and make another run. If not, it'll rotate back down to 26 half. $30 was where our seller was before, right? Our seller was here. So when we rotate back down, if the position is under 30, the market should stop selling at 30 and then pop back up here. If it doesn't, it'll come back down to 26 half. It's really not too complicated. We're going to test that 30 billion in about a minute here. Let's see. Got down to 31. Today's Tuesday, Wednesday, Thursday is month end. Okay, we got a 30 print. And remember, if it comes underneath 30, no reason to be long. It's a nice little, it's a little look above and fail of 32 3/4. Choppy though. Gosh. It's kind of getting hung up at 30, but let's see. I'm in no rush. Yeah, we lost the 30 bid. Oh, a little bit here. Man, it's choppy. The sellers are here now at 31. If you're short from the look above and fail of 33, and I would have bids So the market comes and hits me. If the market doesn't hit these bids, then you know to cover. In the middle of the zone, I would not initiate a trade. I like initiating at the edge. What do we have for earnings today? We have news and earnings, right? Tomorrow is a Fed day, right? So remember that. Tomorrow is a Fed day, so there will probably not be a heck of a lot of risk, right? So what do we have? Before the open, we have PayPal, Boeing, Coke, Royal Caribbean. After the close, we have Bloom Energy, Seagate, Visa, Teradyne, Tilray. Tilray's still public. And Ford. Tomorrow, nothing really serious before the bell, P&G. Tomorrow, after the close, we got Microsoft, Meta, and of course, Thursday, we got Apple and Amazon. Yeah, Bloom. I've got a chart on that. Got a bit of a bid at 30. Let's see if we can. Let's see if we can take out VWAP, right? If you are long 30 against the 29s, make sure that you have your offers out because this market, when it rips, there's that seller at 34. Make sure you sell them, my friends. Sell them, sell them, sell them. Sell them like you stole them. I do have levels on gold. Hang on. Stay with me. There's that move. This is the move we were talking about, right? We dipped down to 30, caught that bid, looked below 30, came back up, took out VWAP, and now if you're past these sellers in the 35s, your next stop's going to be 38 if we can hold VWAP. And that's how you look at a chart tactically to know, right? Say you bought 30, 31, sell a little at 33, sell a little at 34, sell a little at 35. And if you have more contracts, make sure you are offered out, right? Because if the market goes like this and comes back in, at least you'll get a print, right? All right, let's see. I'll go grab some gold stuff here. Stay with me, folks. Am I on the right gold contract? I've got GCEQ26. Is that the right contract? I'll be able to tell soon here. Looks like it's trading. There you go. And now we see whether we hold. That's pretty much it. That's the big move of the evening or the morning, wherever you are. And I'd say if we can stay above 74.33, we should rotate up to 44. Okay. For longer term traders today, remember inventory is short. If we can stay above 74.33, your target's 44. Right? There are going to be sellers just right before there. So just remember that, right? And then if we get past the gatekeeper at 44, you're looking at 52 and then 55. Pretty simple. We could rotate to the downside. Right now, no, because we're correcting inventory. After that piece of business is done, Grain Monk, we could rotate back down, right? So at the present time, I don't see a rotation to 7,400, but definitely by RTH, right? The thing with these markets is they don't really have a lot of stability in them right now, right? They're a little nervous, right? And these trend down moves do happen, like yesterday, right? The thing, we had a gap up, and here's one quick little thing I'm going to tell you guys about. When you gap a market up, right? The supply was here, we gapped it, and we sold for hours above 7,500. And then the thing just fell apart like a cheap suit, bought it all back, and we're going to do it again. But then as soon as they run out of buying, kaboom, back down, right? I really am curious to see if we can go on a longer term chart and take out that 74.10, 74.11 area, right? So I am curious about that area here, right? We'll see what happens. But I'm not going to rule that out. I'm not going to rule out big rotations because this market right now it's not the most stable market in the world, right? So just make sure you watch if it starts trending down and you're a buy the dip trader, just get out of the way. I had a couple of people yesterday say, yes, it started selling off, and the short position that was holding the market on a gap when we came in the market, as soon as those short sellers, as soon as they see any kind of size coming onto the bids, right? And now because the software is so sensitive and so well designed, as soon as those algos, as soon as they see size, they pull the offers so fast it makes your head spin. And the market just drops. Now, it doesn't drop in a scary way, it's controlled, but it's very, how do I say this? For new traders who aren't used to a trend down, it really screws them up, really messes them up because they're not used to trading a trend down market. So past 38, we're looking for the low 40s, like 41, 40. That's where you're going to find that's where you're going to find selling. Okay. The market has changed, right? And you did call that gap up, but that gap came apart like a cheap suit, right? It came apart like a cheap suit. As soon as you go and show this market any kind of size, the bids disappear. So be careful, right? Be careful going into month end. Be careful going into a Fed meeting. It's pretty risk off, right? We got a little balance here that we're in, and so far we're holding it. So far we're holding this 74.06 to 74.96 area. We're just back and forth in there. And if we break that, if you double it to the downside, it's 72.26. If you double it to the upside, it's 76.76. Pretty simple. But remember, we did not fill the gap yesterday. That is important. This market is not filling gaps to the upside very much. And that indicates change. Remember a year ago, you'd get a gap down, we'd fill it the next day. You'd get a gap down, we'd fill it in the overnight. That is not happening now because we have sold a lot of stock, we have sold a lot of product to people at higher levels, and we have created traffic, we have created supply, we have created inventory. There's that seller at 38 to the tick, right? The seller was here. This is why I drew the line. There was a seller here, and they sold there to the tick. They will sell there again because they have to. They have to sell size. Once you understand that concept, if you were long off of VWAP, if you were long 34, 35, 36, you better be a seller at 38 because everybody and his dog and his cat's going to be selling there. This is simple, common sense trading. You don't need indicators. You don't need fancy software. You don't have to look at a million things. This is where they stopped selling. This is where they stop selling. This is where they initiate selling. And as a trader, you need to know this is the cost basis. This is where they got cheap. This is a deal, right? This is discount. And this is profit, right? This is 2 times profit. So they take the cost basis and the cheap discounted stuff, and now they're selling it at a profit. I told you guys half an hour ago, we're going to take this crap and we're going to sell it up here, and that's exactly what's going on, right? So trade smart, trade careful, come into our trading room, learn how to do this so you don't waste your money, that you don't waste your time, your mentally and energy, right? We'll teach you practical, common sense market trading so you don't, so you're not blowing up accounts, right? There is no business reason to blow up an account, right? It just doesn't make any sense. There's a seller. Told you. So if you were long off of VWAP and you're not selling the 38s, well, you're going to lose money. Everybody understand that? So if you buy something at 33 or 34 and you know that there's a seller at 38, sell 37 and a half. Why not? It's simple. You don't have to overcomplicate this. If you go into a trading room or into a trading education thing and they start spouting all sorts of really complicated stuff using terms you've never heard of, you know that dollars to donuts, it's bullshit, right? You're right. I told you, right? You're long 34, 33, sell them at 38, make 3, 4 points, take the money and run, right? So yeah, come into our room. We'll teach you how to do this in a non-complicated, simple, actionable manner, which means here's where you put your bid, here's where you put your stop. There's a reason why. Once your order is filled, this is where you're going to sell and why. Very simple. There's no reason to overcomplicate it. Markets have been around for hundreds of years, right? long before Windows 95 and screen-based trading, people made money doing this. Any questions? And we've got a free trial. So come in today, tradingsyndicate.org. Those of you who are on YouTube with us, if you want to try out the room for free, we have a 1-day come and check it out. I'd love to have you. And if you come into the room, message me, say, hey, JJ, how you doing? We'll have a chat. I'll see you, and if you need help with your trading, we'll be happy to hop on a call or, send me a message. We'd like to help. And that's pretty much it for me this morning. You guys have any questions? All good? Okay, folks, I am going to sign off. Let you go enjoy your morning. Let's be careful and profitable out there. And remember, if you don't understand why you're taking a trade, you probably shouldn't be in it. So just reach out, and we're here to help. I'm JJ. Thanks so much for being with us, folks. And you guys in the room, we will see you in a few hours. Thanks, everyone. Bye for now.